The World Trade Organization does not count our trade balance with counter countries for anything other than their tariff rate and our tariff rate. But if China steals our plans for the iPhone and then makes it at Huawei, steals Tesla's full self-driving and makes it with Li Auto and BYD.
Get ready for a new episode of KP Talks Dollars and Cents. Learn financial literacy and get real-time updates on all things housing, finance, and real estate. So let's get started. Here's your host, Kevin Peranio.
Hey, it's KP coming to you live from Corona, California. I just wasted 30 minutes, 2 15-minute videos with terrible audio. That's how much I love you. So I'm committed to this. I am disciplined on my Monday night videos. So what is going on in the world? A lot. I was in D.C. Advocating against trigger leads and trying to get trigger lead reform together with the Mortgage Banker Association, the Broker Action Coalition. There is a co-sponsored bipartisan bill in the House Resolution 2808. There's also a co-sponsored bipartisan bill. It's like Rose and Torres and Reed and Haggerty. There's guys from two different parties in both the House and Senate. So hopefully we can get rid of dozens of annoying phone calls as soon as you get your credit pulled trying to get a mortgage. So that's being worked on. It was hard coming back because, I was gone a week, got to play catch up here. Then we had spring break with our 4 kids, trying to make the most of the Friday, Saturday, Sunday I had with them when I missed spring break advocating in D.C., such is life. And then today we had our senior management meeting. We do it monthly. It's a very long meeting. And here we are at 11 p.m. on the West Coast, trying to get some information to you. So let me get to it. Let me first say, especially for those now watching, I'm starting to put this on Instagram Reels and YouTube, of course. We have a lot of people that are watching now that are not in the mortgage space and not one of my colleagues or peers in real estate or mortgage or any of that stuff. I am not a financial advisor. I am not licensed to tell you anything, but I am not responsible for your losses, only your profits. So I love relaying some good information here. The bond market, treasuries, which is how we fund our government, had a very volatile week last week. Just from like a Thursday to a Tuesday, we saw like the 10-year treasury with this crazy scare with all the tariff talk, and we're going to go to a depression, recession, and inflation is going to go through the roof, and we have no idea what's going on. Went down to 384, and then like just a few trading days later, it was all the way up in like the 460 range. So the 10-year treasury yield is a great way to watch mortgage interest rates as well. If the yield goes up, mortgage interest rates are going up. If the yield goes down, mortgage interest rates are typically going down. Typically, mortgage-backed securities is the fixed income security that directly ties to mortgage rates. But that's in different coupons. You have to know which one's the liquid one, and sometimes it doesn't always move together with the yield. Just watch the 10-year yield, and it's a good way to watch what rates are doing. And 2 Fridays ago, if you were a borrower talking to a local originator and you had a rate that you liked, just just give me the weekend to think about it. You walked in on Monday, that rate was gone. So you no longer qualify. So these things move fast. You have to take, if you see a rate you like it, lock it in. That's kind of the phrase. I stole that from Audrey Boisino. You know who you are. They're over at Mortgage 411. So that volatility in the bond market was a stress in the bond market, but not a dislocation. So the Fed did not feel the need to step in and do anything, as they all said last week. So stress is different than dislocation. They stand at the ready. They are ready to do something, whether it's, help with credit repo facilities, buy more treasuries, extend credit lines for credit default swaps and high yield bonds and all that kind of stuff. I can get into all that. Bottom line is the Fed is ready to act if there's true dislocation. But last week, as crazy as it was, might have been capitulation for those of us who are investors or look at the stock market or look at our 401k. Just sell everything. It's going to go down forever. If you felt like that, you're not alone. A lot of people felt like that. But the Fed said that was just normal market stress. We got through it in an orderly fashion, even though it felt like a roller coaster. So the VIX, VIX, is a volatility index. It's a fear gauge. It is a measure of volatility in the stock market. You can check it out. You can look it up. It spiked to 60 last week. That's very high. Now it's come back down to earth, just like the 10-year treasury has come back down to the high end of the range at 435 today. The VIX came down to 31 and then popped up a little bit to 34. There's going to be some more uncertainty coming. But a lot of people think maybe the worst and fastest worst version of what we just saw with the whole tariff bomb is behind us. I'm not saying we're at the bottom of the stock market. I'm not saying the worst is over, but a tradable bottom is in. And so you could look at stocks that are washed out, maybe not look at stocks that are not washed out. There's oversold with maybe room to go down, and then there's washed out. I mean, before Liberation Day week, like in March and leading up to Liberation Day, there were stocks that just stopped selling. So even last week, as the stock market kept tanking, some stocks were done selling because there just were no more sellers to sell. That's washed out. A lot of those were actually in the Mag 7. Look at the Magnificent 7. NVIDIA, Microsoft, Apple, Tesla, Netflix, Google, Meta, Facebook, aka Facebook. Some of them just stopped going down because there's just no more sellers. So, a lot of companies, and I'm kind of gleaning some thoughts from Fundstrat. If you watch CNBC clips, Tom Lee from Fundstrat, I subscribe to him. I'm not going to say everything he said, but he put some, kind of some guardrails on what a washed out stock looks like. Something with a $10 billion or more, market cap. It's like how much the value of the stock is. It's out there in the float, under its 200-day moving average, more than 10% below it, not selling anymore. That's kind of consolidating. Maybe it's found its bottom. It's washed out. There are some companies that could still go down. A company with no earnings that, maybe they get a tariff stuck on them. They don't make any money. Maybe they're small. There's still some companies that can go down. So, a lot of times in the past, global financial crisis, dot-com bust, stuff like that, a couple years ago with the banking crisis, that VIX index has come down to around 31. And even if it's gone up after that, to show more volatility, the S&P 500 went up. And so the SPX or SPY, whatever one you want to look at, you can look at the top 500 companies. Don't look at the Dow Jones. No one looks at the Dow Jones anymore. I mean, you can if you want, but no one does. You look at basically the S&P 500 and the NASDAQ. That's where all the big companies with tons of free cash flow and, like Microsoft and Google came out and said, we're not going to reduce our billions of dollars of spending on semiconductors and infrastructure. They call it CapEx, capital expenditures. They're still going to spend. Walmart last week, they went to DC and they said, hey, we're going to ride this out with you. We got your back. And so they had this big investor symposium in Dallas. They said, we're just going to eat any Chinese tariffs or whatever comes our way, and we're going to make less money, but we're not going to pass on overwhelmingly all these costs to our clients. And they're the biggest grocer in America. 54% of their revenue comes from selling groceries. So, maybe you're not going to Whole Foods or Ralph's. You're going now to Walmart and you're buying groceries from them. And, maybe, you're getting your goods from there. And so the American consumer is stressed right now. Something like 10 million consumers are 90 days or more delinquent on some kind of consumer debt. $250 billion of consumer debt, credit cards, car loans, personal loans, whatever the case may be. They're delinquent. Maybe mortgages throw in there. So I think I read somewhere that's something like 23% of 43 million borrowers with outstanding balances are 90 days or more delinquent. How's that going to play out? How is the consumer? Our GDP, our gross domestic product, is 90% consumer spending. Wednesday, we get March retail sales numbers. How is the consumer spending? Is that stale data because that's March and now everyone's worried about future tariffs causing more inflation? If that's what everyone's worried about, then maybe that number doesn't really matter. It kind of matters because it does show the health of the consumer, even if it was, all the way up through 14, 15 days ago. But the CPI number, Consumer Price Index, came out on Thursday, and then on Friday, the Producer Price Index. It's like what consumers are paying goods and what producers are paying for goods. They were negative. It's been the first time it's been a negative month-over-month read in a long time. Doesn't matter because tariffs are going to be worse later down the road, and everyone's fearful of that. Well, no one really knows. And so I'll get into some tariff thoughts in a second. Remember, I don't watch Fox News or MSNBC or CNN. I don't get news from them. They're there to make you feel some type of way and watch more of their show. They are not traders. They are not analysts. They are not in the stock market. They are not looking at the data. They love playing with your emotions. That's why I won't do it. So if the inflation data, which was slower inflation, so that just means prices are going up more slowly. That's disinflation. I don't know what tariffs will bring. For sure, some inflation, but how much and where, I don't really know. Will the consumer just adjust? You know what? I don't need to buy a new iPhone if 94% of them are made in China And Apple, that's Apple's problem. Maybe you'll join Team Android. Get off the iPhone, trap, if you will, which is why I'm not on it. I'm not in your text message anyway because I don't waste my time, So come to Team Android. I'm kidding, kind of. But Apple did commit $500 billion over the next 4 years, spending here in America to manufacture things. So we'll see how they pivot. The White House did recognize it takes time to move manufacturing in factories here. That's why there's a 90-day pause. That's why there was exemption on the Chinese tariff of 125% for electronics, for things made over there, computers, semiconductors. Now, Howard Lutnick, as economic advisor, said that that is a temporary reprieve on semiconductors. There will be a future semiconductor policy, which iPhone things would fall into place. Well, NVIDIA, they just committed $500 billion over the next 4 years as well to spend and manufacture computers and things here at home in America. So it's starting to work. It's starting to work. Now, it's not just tariff for tariff. I know we know that, but that Liberation Day board included all things, other than tariffs. And the reason why, and there's some method to that madness, not defending it, I'm just explaining it. The World Trade Organization does not count our trade balance with counter countries for anything other than their tariff rate and our tariff rate. But if China steals our plans for the iPhone and then makes it at Huawei, steals Tesla's full self-driving and makes it with Li Auto and BYD, and they steal it, there's no repercussion. We can't sue them. They're like, good luck. Sorry, we stole your stuff. And now we're making it cheaper and dumping electric vehicles in Europe, which Germany has a problem with because Volkswagen's the number one EV seller in Europe. So, there's no way to go back to after China or currency manipulation or cheating or sending things to Vietnam, rip the Chinese label off, and then ship it to us. It's called transshipping. How do you get around that? VAT taxes, which aren't counted as a tariff. I mean, we're way out of whack. And so, again, like my friend Mateen, I saw on Saturday, he was Turkish. He said it was like, you have the two best billiards players in the world. You hit that rack, you have no idea where the break's going to go. So we broke it up on Liberation Day, and things have come down since then. There's 90-day probationary period. There's carve-outs. There's exceptions. Last couple of days, we're creating a coalition with UK, the European Union, Australia, Japan, and India, much like we did on the battlefield of the Middle East where they bled side by side, our men and women. We're now creating a coalition. Bill Ackman wrote a post on Twitter, now known as X. We could be saying, hey, let's all gang up together on China. They deceive you too. They ruin your markets. They steal and lie and cheat. And you're getting hurt too. And so if we don't band together, then, something's going to give. And so, so I think there's an off-ramp for China and the U.S. to negotiate. We created some exceptions to things that they make. And, we want to work with them. So it's a negotiation. And I think the worst was thrown out there, and we've come back since then. We go up from there, and the tariffs and some of the policies, if people don't like, if the Trump administration doesn't like the way the negotiations go, yeah, and that would be future bad news. But right now, we're in a 2-step forward, 1-step back market. We just took 2 huge steps forward in the stock market, and maybe we'll take a step back when something else gets released or removed, or a ratcheting up of the tension and all the narratives out there. But I don't know. I will just leave it this. The Fed is speaking this Wednesday as well, and that will move markets likely. And some of these stocks that are washed out that can't be sold anymore, maybe it's a good time to nibble. It's a tradable bottom. Maybe not the bottom, but you have to pick the bottom if you have a long investment horizon. And if you're looking to lock a loan, watch it. You could literally lose your lock today. So watching these things like the bond market, the 10-year treasury, if they start to come back down in the low 4 range, high 3 range, it's a great rate. Oil is cheap, cocoa's cheap, lumber's cheap, eggs are cheap, all cheaper than where they were at the beginning of the year. That's good news. So we're going to watch the data. We'll get some more data this week, and I'll do a video Thursday. I hope this third time I did this stupid video that my audio is good. Cheers. Hey, it's KP coming to you live from Corona, California. Thursday afternoon at 4:30. This is like the earliest I've ever recorded end of the week video. And it's Good Friday tomorrow and Easter weekend. So happy Easter. It is time for rebirth. Spring has sprung. So what are we going to talk about today? by the way, we are open tomorrow, even though the markets are closed, and we will be accepting locks. I think a lot of lenders do that. Feelings. What good are they if you don't have the emotional intelligence to contain them? This is not an indictment. I am very guilty of, letting my emotions go. I had this guy cut me off today on the road, and I've been working, you guys know I work with Steve Scanlon over at Rewire. I've been working on my mindset, and, the road rage that comes out in all of us every now and then. He says, look out, get outside of your head and look at you and go, that's interesting. Why did I react that way? And I was on a call with a friend in Austin, this guy just got over to my lane, the left lane, the HOV lane, and he had room in front of him in the lane, and he was just going slower than me. He just got in front of me, so I had to slow down. So then I go around him, and then I'm like, I'm gonna slow down in front of you. This is how it feels. So maybe next time you'll look and won't impede someone else's progress. And then I just said, and the reason I'm doing that is because it feels good and cathartic to get out of my system. So I'm not perfect, although I preach a lot about emotional intelligence here. But I am going to go to the gym here in about 15 minutes. I just cranked out this goat fuel. This flavor no longer exists. Gummy bear is a good flavor. You can check it out. It's really good. Shoot me a message if you want like a code for some cheap energy drink. They use cordyceps, so it's not too like sugary and won't crack you out. Okay, feelings. Rates went up. Tariffs. Rates went down. Tariffs. Trump is using Powell as a punching bag. What else is new? Tariffs. Trump gave Powell an excuse to not make any moves. Tariffs. Everyone just says tariffs, right? And so consumer sentiment data. I feel like we're going to have 4% inflation. Tariffs. I feel like we're going to have 5% unemployment. Tariffs. Okay. So let's dial it back to, from a 10 to about a 6. The 10-year treasury is back in the range it's been in, for about 2 months, and it kind of got below 435, which was the high end of the range. And now it, closed a couple sessions, tried to go up and popped up against that 435 resistance. And so we'll see if it holds, unless there's anything unexpected that comes out of the markets. That's the range for now. And those rates are decent. We're getting a decent average amount of locks coming in. I'm sure we all are. It's spring purchase season. People get out of school in the summer and buy houses. Is rent versus buying? What's the price? And you're going to make that decision. And we're woefully undersupplied. So whatever your feeling is about sentiment, the hard data is what matters. And retail sales came out yesterday. And, it's interesting. Retail sales and inflation numbers, they always take out the volatile numbers, like it's CPI, PCE, they take out food and energy because it's explosive, although we have to eat and we need energy. And autos and auto sales are seen as a very volatile component in the index. And so when you take that out, retail sales are pretty strong. And retail sales have been strong. And so everyone says, well, they're only strong because tariffs, right? So, the Trump administration sure gave everyone an excuse to say whatever they're feeling, they got something to blame it on. But the reality is there's 12 components this is the reality. There are 12 components that are measured in retail sales, and 11 of them were up, 11. You want to take out autos because people are, look, I'm not denying the fact that if cars get more expensive, that people are going to buy now maybe instead of waiting until later, but rates are higher. So, you didn't pay maybe what could be, which no one knows, how much higher a car will cost. But if the Fed's cutting rates and rates come down, even with the higher price, you're good. Same with houses. So these are nuggets to tell our teams and talk about when we're talking to borrowers who have feelings, especially a first-time home buyer. It's a very emotional process to buy their first home. And, if they are unlike me and they're watching the mainstream media, they're in their feelings and they can't help it. Some of the comments here on LinkedIn, people have a lot of feelings, right? And so the reality is no one knows what is going to happen the rest of the year. And that uncertainty makes people feel uneasy. But so what? That's life. You could die the second you look down at your phone and watch my stupid video and get hit by a car. So, there's a lot of uncertainty in life, and you just got to roll with it, right? Like I mentioned in the last video, and Steve at Rewire said, VUCA, right? Volatility, uncertain, life is complex, ambiguous. You just got to roll with it, deal with it one task at a time. So without the volatile auto component, retail sales was up 0.5%. The estimate was 0.3%. That's a big increase. The only component that went down, the 12th one, is like gas. And that's a good thing that sales didn't go up in gas because gas prices are coming down. But in the inflation reports, there's the core PCE and core CPI where they exclude energy. But we all, well, not me, but we all need gas for our cars, and we need heating oil. Although, other than January, it's, winter's largely over. January is pretty tough. So, you exclude these things, you look at the retail sales, the consumer's pretty strong. They're healthy. They're employed, gainfully employed. Jobless claims came out today, not a big deal. Continuing claims, 1.85 million. So elevated. So not the best market to be leaving your job and going to find a new one. But if you're gainfully employed, your wage inflation's good. Your wages are keeping up and keeping ahead of inflation, and people are spending money. As it relates to the tariff war and what's going on with China, they're going to negotiate. They're not going to not talk to each other sometime. And so you can kind of see the banter that's coming. China says, "Hey, let's," and I'm gonna get into why Trump's making his Powell comments, ratcheting him up lately. It's not just about the cut. So China's saying, we would deal and talk with the United States. We need to show us respect. I just find it weird when people just demand respect or ask for respect. I usually respect them less. And we also know that they're dishonest in business. And so they're going to come to the table. And they're going to come to the table. I mean, I don't know. Do we need to buy a bunch of, plastic lightsabers and fill cargo ships with rubber doggy doo out of Hong Kong? That's a line from Top Gun, by the way. R.I.P. Val Kilmer. But the thing in China is they have complete control and cooperation of their central bank, and they are absolutely manipulating their currency. They've been selling treasuries to devalue the yuan so people can conduct business with China and their manufacturing machine all around the world in cheaper Chinese currency. And our central bank does not cooperate with the president. It runs independently. And this Fed board is made up mostly of people that lean left. Although, ironically, Fed Chair Powell affiliates conservative. And so I like the independence. It gives our market credibility. And, President Trump wishes the central bank would work in concert together with his master plan of tariffs and tariff policy and creating trade balance. But they have a dual mandate, and they're sticking to it. So you got to give Chair Powell some credit, no matter how loud President Trump bangs on the drums to get rid of Chair Powell. He's gone in a year anyway, so we're going to see who gets replaced. And when you do an intra-meeting cut, or you do actions intra-meeting, or you fire the Fed chair, that is not a sign of a stable market, and the rest of the market would probably not be as likely to buy our treasuries, and yields will go up, and that's not good for rates of any kind, especially mortgage. So hold your ground, Chair Powell, and but they could buy treasuries. If there was a treasury problem, they didn't last week. They said it was a stress time of the market, not a dislocation. So we'll see where we go from here. I had an early bet of a June cut. And I've been wrong and early on when a cut should come, because I've always thought that's when it should come, and then the Fed is always late. So if we're already in a recession through these first two quarters, they'll probably cut, sometime in July. I thought it was July last year that they would cut, and it ended up being September, but it was 50 basis points. So follow the two-year Treasury. You can see now that the two-year Treasury is not moving as rapidly as the 10-year Treasury is, which means the fear of inflation is in the bond market, and also the fear of slowing growth. So if the two-year Treasury is anywhere below 4.375, the Fed has a clear path to cut right now, at least another 25 basis points. I think they could cut at the next meeting. They probably won't, because there isn't a dot plot, aka summary of economic projections, until June. So they probably want to cut at a time when they are also saying their thoughts on the dot plot, which is always wildly inaccurate, and they have no idea. But it is labor over inflation, although all the signals coming from the Fed is, we're looking at inflation because we just don't know. And all the comments made by Chair Powell yesterday in Chicago was that, tariffs typically have just a short-term effect on inflation, but this time, because they're so high, could be longer. We don't know. We're going to hold back. And the stock market sold off because there are now less cuts anticipated in this year. We are all in the moment every day on this data, but it does all smooth out over time, and the trend is your friend. The trend is for lower rates. The trend is for a healthy labor market. The trend is for lowering inflation. And I will tell you that, the U.S. consumer is still the strongest in the world, and they'll make do. If they're not going to buy a bunch of cheap crap from China, they'll go out to dinner. I mean, they did after COVID. The supply chain got crushed because of COVID, so people switched from buying and pulling forward their purchases on goods and emptying all the shelves of toilet paper and paper towels, and they started going out to dinner. We're ordering out. We're traveling, and we're a services-based economy. So that's good for our economy if we stop buying cheap crap from China or whoever. So I think the U.S. consumer is super, super smart and will adapt no matter what. They're not going to just pay large prices because of tariffs. So, all right, enough mocking people's feelings and my own feelings and everyone's feelings, because we all have them. It is a time to reflect and rebirth and renew this weekend. There's a lot going on. Stock market Q1 earnings is taking off. Netflix crushed it. They don't care about border tariff wars, man. They raised the prices in January, still beat their earnings, still guided higher, still made their profit margins. Google and Tesla report next week. Those are big parts of the Mag 7. There's a lot going on. So we'll see how business is doing. Of course, tariffs, we'll just discount everything they say because that was only January through March, and everything's going to be different forever going forward. So think how silly a lot of this stuff sounds like when I say it like that. So I catch myself saying silly stuff too. But I'm going to use the word tariff a million times this weekend and try not to on Sunday. Have a wonderful Easter weekend. And I hope this first take, my video quality was good. Cheers.
You've been listening to KP Talks Dollars and Cents, a top-rated show for those who want to learn about the economy and mortgage environment. Tune in each week for more episodes, and please leave us a 5-star review on Apple Podcasts and Spotify. Kevin Peranio does not render or offer to render personalized investment or tax advice through KP Talks Dollars and Cents. The information provided is for informational purposes only and does not constitute financial, tax, investment, or legal advice. For more info, follow KP Talks Dollars and Cents on all of our social channels.